the amount is not there, and you go to the bank purposely to go and obtain, then it means that it becomes a specific borrowing. But instances where you've already obtained some loans, and let's say you've not used the loans for whatever that you wanted to use everything for, is that not it? And there is still some amount left in your books, or you still have some amount left with you, and the intention came that, okay, let's build this particular asset, and you decide to use the debt that you already have in with your company, it means that it becomes enterprise pool or existing debt. Are you getting the picture? So we are saying that in terms of capitalization, in terms of, okay, we are going with specific borrowing, we are going without enterprise pool or existing debt. How do we capitalize this borrowing cost associated with the construction of the assets? We are saying that if it comes to specific borrowing, we are saying that the borrowing cost incurred on borrowing during the period. So what cost can you capitalize? You can capitalize the borrowing cost incurred on borrowing during the period, less any investment income on the temporary investment. Let me explain this to you. Let's assume that you went for a loan of, let's say, $10,000 US, okay? And you decide to use it to build an asset. Is that okay? Let's say, you don't have to use the 10,000 at once. So let's say you used first 3,000. How much is left? You'll be left with what? 7,000. Now, this 7,000 that is left, what happens is that, okay, you use this 3,000. Let's say you're using 3,000 for the first 3 months. So for the first 3 months, you are not touching 7,000. So you decided to make an investment with that 7,000. That's a smart move. Let's say you buy treasury bill for 3 months.